Hello traders, hello everyone, my name is Gregor and welcome to our new video surfing the Elliott waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the Euro, Aussie, Kiwi, S&P 500, crude oil and also dollar Mexican peso. As you know, euro dollar on the long-term charts is still in a downtrend. We are looking for a final wave C of this complex correction that could be headed towards parity level. So it's a 78.6% retracement that I'm looking for, meaning that there is some room for more weakness, but generally speaking, I think that later this year or start of 2023 we could experience some important shift in trend here. Now wave C is a motive wave, meaning it should be made by 5 subwaves, and if you look closely here on the structure down from start of 2021, it's not a 5-wave drop yet. I'm tracking this as a wave 1, then a flat for a wave 2, a nice extended wave 3, and now it looks like that we are headed into wave 4 rally away from these 2017 lows. So this appears to be a very important support for now. More importantly, notice that reversal is quite strong. That's why I think that we are already in the middle of this corrective wave 4. Now first resistance would be at 108, but since this is still only the first leg of this wave 4, as you know, wave 4 is a corrective lag, meaning it should be made by 3 waves. It means that we could easily run much deeper into this previous wave 4 area. So looking at the 4-hour chart to give you the full perspective on the short-term basis, well, notice that we have this broken trend line. We came out of this downward channel, so this 5 waves down is finished, and after each 5 waves you would expect a 3-wave retracement. So I think that that's still only wave A. The very nice support could be around 105.30, but already 106 level is something that we should watch for. It was the previous swing highs here in this choppy wave 4, which was actually a triangle. So I think that euro dollar could be headed higher for now. Of course, the reason for shifting trend here is because the gap between ECB and Fed is narrowing. So finally, ECB is now also turning hawkish. Now there are some members there that will favor the 50 basis point increase rather than just 25. So that's something that, of course, traders are betting on, and obviously we are seeing the response on the prices here. So I think that as ECB members said, they are going even to move out of negative rates later in the summer. So this could be very positive for the euro regarding the short-term positioning. Now let's take a look also on Aussie. Now we have also some optimism coming through on based on China. As you know, there's still, however, cases, but they are planning to go back to normal work and economy running in June. So this is something that could be positive for Aussie. So watch out for Chinese yuan strength. If this currency would strengthen, then I think that Aussie dollar would also have a positive impact. Also, another thing that is important for Aussie is potential support on stocks. Stocks recently turned higher. They are holding lows on the S&P 500 that I will take a look in a second. So further risk on, even if just low price action, China could also have a positive impact not only on Asia but on a global markets as well. We are seeing hawkish Bank of Australia, so this is something that could put a low in place on Aussie. From a technical perspective, there was a very nice pullback down from 2021 highs. Potential head and shoulders could be a very big one, could be at the support now with the right shoulder that also equals wave B pullback. So that's why I'm looking for a wave C higher. Now looking at the short-term picture, which could be the most interesting, at least for short-term traders. So I spotted this reversal here, very nice at the lower trendline support after a divergence of the RSI. We came out of this downward channel as well. So looks like that was a first 5-wave rise, and we are now facing, or could be facing, just a temporary pullback before market moves even higher. So I will be watching this one very closely, since I think that there can be more upside, room for much more upside here on Aussie. Now let's take a look on Kiwi. Now there was 50% basis point increase from Bank of New Zealand. We have seen a nice push higher here. That was already a reversal earlier that we spotted after this 5-wave drop. So current price is not a surprise, but I like the idea that even now fundamental aspects confirms the reversal that we are seeing in price. So market is breaking this trend line. It looks like this bottom has been reached, so we are rising here also impulsively, as you can see. So more upside, in my opinion, could be in the cards. Of course, just be aware of this pullbacks here in upcoming sessions. Now the first support would most likely be here at 6,420. More important one could be here at 630.60 area. Okay, so watch out here for more gains back into the area of a former wave 4 or possibly even higher. Now let's take a look on the S&P 500. So the S&P 500 still, I mean, we have these three waves from the highs. Okay, so I think that this could be a correction, could be even a complex correction, since you can count this also as a WXY, because the first drop here was clearly in three waves. Okay, so what's going on now? Well, there was a wicks at the lows. At the lower side of this chart, you can see that fear index moved very nicely here into some overbought extreme levels, and usually when that was the case, especially when you look back since 2021 readings, well, when a wicks was up here, we have seen then obviously fear slow down and stocks move to the upside. So again, wicks recently in the last few weeks reached this upper range, and the S&P 500 is now trying to stabilize here at the lower trend line support of this parallel channel. Also, if you look at the 4-hour chart, notice what is the most interesting to me at the moment is that we have here equality in price, okay, that comes in around 3,900, and then you have also 221 bars of the first correction compared now to the current correction. And notice that on Friday this was exactly the same timing of this lags. Okay, so I think that was quite an interesting potential support here. We still need to see this broken trend line to confirm further rally here, but if that would be the case, I think that US dollar in general could see much lower prices. Also, you have a very nice divergence here on the RSIs as well, which means that actually bears can be losing strength here. However, as I said, this trend line is important. As long as this one holds there easily, this market could just retest one more time low. So it's very important to see something more decisive and significant to the upside before we can call and completely confirm that low has been reached. And now let's take a look on crude oil. Now in the Eurozone, as you know, they are finishing this agreement between the states in the Eurozone that they will ban completely Russian oil and import. So of course this is something that is driving this market as well. We are seeing back and forth moves over the last few weeks, but overall this suggests that it's a correction. Okay, so it can be a way for somehow I favor the upside, because this situation in Ukraine, I believe, is not going to end anytime soon. There were just latest news that talks between Ukraine and Russia are now has stopped actually. So we have to be aware of potential more upside here. And if that would be the case, if we would see break out of a triangle, then of course commodity currencies could see more upside, like Canadian dollar, Mexican peso. So I have Mexican peso here, and what I see is very nice bearish price action actually. Okay, so we have here from these 2020 highs, we have very nice 5 waves down, and then you experience this corrective recovery. Notice that market made very nice break below this trend line that acted as a resistance right here. So usually that's like a perfect kiss for a good buy, but there you have another trend line support right there connected from summer of 2021. So we are here once again at the very similar levels like 1 year back. So I think that sooner or later this trend line or these levels will be taken out, and then we could very quickly see a continuation down towards this 1860 area, potentially even here in the upcoming months. Okay, so I'm watching this one as a confirmation. As I said, if crude oil gets higher, dollar Mexican peso could easily be could easily be much lower. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. If you're watching this on YouTube, please leave a commentary below to support our free analysis, and we'll make sure to make more of them in the future. Okay, traders, have a good day. Bye.